Hey guys, and welcome to another Daily Market Report here. As you can see here, today is Thursday, and we got the weekly jobless claims that we always get. But let's start off with the housing starts for the month of December. We had a revision to last month's, or the previous month's number of November. So this is annualized, seasonally adjusted annualized units here at 1.547 was initial. It was actually revised a little bit higher to 1.578. Forecast was coming for a slight dip down to 1.56. However, instead of going downwards, it went upwards in December to 1.669 million units here. So very good start here. This was actually a very good number here, especially on the single families. We did see an increase of single families in this number here as well instead of multi-families. Now, building permits is kind of like your future housing starts, so this is a good number to watch for as well. So in November, we had 1.635 annualized units. Forecast again was calling for a slight dip in December, and it actually went upwards too, as well as went up to 1.709 million annualized adjusted, seasonally adjusted annualized units there. So good numbers overall for housing rate there. So we'll have to look to see if that will continue. As yesterday we saw a dip in the home builder index, which was the confidence level for home builders. We also got manufacturing in the Philadelphia area, which we have the Philly index, Philly Fed index. So the previous report in December was at 9.1. Forecast is supposed to be a slight uptick to 12, and actually it kicked some butt over at 26.5. So far, great news there. And then jobless claims. We had the previous report came in at 965,000. However, that was revised lower down to 926,000 people applying for unemployment rates. So forecast for last week was supposed to be 910,000, and it came in a little bit less at 900,000. So this is kind of a tepid report because we did see this drop down into the 700,000 range and then rise upwards. But again, we like to see these numbers continue lowering as we continue going on here. So let's jump ahead and see what's going on in the headline news here. After starting the day off and actually in positive territory, all three indexes were in positive territory. Now we're starting to see a turn here so far mid-morning, which the Dow went to negative territory, and now we just saw the S&P kind of dip into negative territory. Nasdaq so far is the only one that's still in positive territory. We do got some Q4 corporate earnings out there, so there may be a couple reportings out there that may be affecting that as well. We do have now the first day. Biden is president, that we have executives being signed. But the big thing that they're watching, investors are really watching for, is this $1.9 trillion stimulus package. They want to see what kind of a package that's going to be out there. Now, they don't think this package will go through Congress as is because they will get some pushback from other Democrats. But we'll have to wait and see what the final result will be, as they should have an easier time getting it through since they have full one-party control here. Earlier on, we had the ECB, which is the European Central Bank, announced that they will keep their interest rates unchanged, but there was a slight change in their statement, basically that they're going to keep accommodative, but they're going to keep an eye on that there could be some changes down the line, maybe with the purchasing of assets, their asset purchase on their PEPP program. Now, that did affect us here in our markets here, but again, this speaks to us. Let's just go over there and take a look at it here. So as you can see here, we did start off the morning lower with this little tail here on there, but after that we kind of shook it off and started rising above it, kind of fighting above it. So we're up about 5 ticks or 5 basis points right now. So with yesterday's gain and today, yeah, we should be a little bit better. If lenders didn't reprice, we end up closing the day up 16 basis points. So if lenders did not do a price improvement yesterday, we should receive that price improvement today. So that would be good news for those in there. Now, this could be a kind of a signal to kind of keep an eye on rates, because with this announcement by the ECB, that this might put that stigma in the investors' minds that if they're not going to be purchasing mortgage-backed securities, or at least scale back on their purchases, then you may see a slowdown, and that could put pressure on mortgage-backed securities, and thus seeing rates rise as a result of that. So be a little cautious here. We could see a possible change here in the very near future, as that could kind of stick to them. That stigma could stick to their brains a little bit here, if that makes sense. Here's yields. Yields are at just under 1.11 at 1.099. Like we've been saying, this whole week so far it's been in this range between 1.09 and 1.10. So we're kind of in the sideways pattern for the most part with the yields here. All right, so that's pretty much it. If you guys are got any questions about mortgages or interest rates or anything else I can help you guys out with, a little bit of background about myself. I am a loan officer and I do work with a national lender. I'd be more than happy to answer any questions I might take. Best way to reach me is just through the direct message on the social media site. You may have found this. At this time, at some point, I will get a link or get you something where we can meet, where you can at least reach me. Give you a location where you can reach me a little bit easier, like a website or something. I'm kind of getting that work done right now, and hopefully I'll have that out shortly. But in the meantime, just go ahead and direct message me through the site and try and answer any questions you guys have. I can, if you guys want me to take a look at any refinances or purchases, we can help you guys out with that. We do pre-approvals as well as financing for your purchasing. We also do refinances, so we can help you out with getting the better rates, getting you, changing the 30-year to 15-year if you want, or if you look at just take some money out of the property, we can help you out with that. And we do come up with some strategies that help with different scenarios out there as well. So if you need help trying to figure stuff out, please feel free to reach out. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.